Hello, welcome to kneppyinvests. Just over 1 hour to go. We're trading on this final day of the trading week, sort of like a one-off trading day. In fact, I wouldn't be surprised to see fairly low volumes today, as most people probably wanting or having a 4-day weekend on April the 26th, 2024. And if they're not following what's happening on the market, they might be a little bit shocked that everything is down over 1%. Now, looked like it was going to open down about 1%, and that has come to fruition. A little bit surprised because the American markets were down overnight. However, Microsoft and Alphabet released their quarterly results after market had closed over there, and pretty much a positive reaction, particularly when it comes to Alphabet. In aftermarket trading or after hours trading, Alphabet was up about 13% last time I looked, and that's coming after Meta had a down day, a nice little bounce. In fact, I bought some shares in Meta, and that's probably the last company I really want to buy that I had not had or taken a position in. And that comes after the day that Tesla went up a significant amount. So I would expect maybe a pretty good day on the Nasdaq overnight. Now, that's dependent on what else happens in the next 6 hours or so. And one of the reasons why the American markets were down was because of pretty weak GDP numbers, which is really weird. The other day, the market was down because inflation was a little bit greater or more than expected, which would mean that the economy is doing better than expected. Now, GDP numbers were worse than expected, and then the market went down. The market is psychotic, schizophrenic right now. It doesn't really know what it wants. And in my opinion, bad GDP numbers is worse than a little bit higher than expected inflation. But if you have a little bit higher than expected inflation or rising inflation or high inflation with really lousy economy or even recession, that's the worst thing you could have. That's like stagflation. We don't want stagflation. Okay, so the agenda for today's video is I'll go through some tweets, some interesting tweets will show you. Then we'll have a look at the ASX today and a sea of red. Apart from, I'm assuming gold is doing okay today. We'll have a look at that. And then I'll go through some announcements. So I do have a top 5 announcements. And those top 5s include, coming in number 5, we have Nick Scali. Number 4, Sayona Mining, they released their quarter results. Number 3, Newmont, which is a gold company that recently acquired Newcrest, I believe. Number 2, we have BHP, which has been in the news last few days. In fact, I heard this news yesterday. This is worldwide news. What BHP have done. And coming in number 1, without a doubt, without fail, it just had to be number 1, is Resmed. I would be absolutely shocked to see or not to see Resmed's share price up at least 5%. If it's not up by more than 5%, I would be flabbergasted. If it's up by more than 15%, I'd be surprised. So I do expect Resmed's share price to be between 5 and 15% up today because they released their quarter results and they showed exactly what I wanted them to show. Increasing margins. That's all I wanted to see from Resmed was increasing margins. And I'm getting a little bit ahead of myself. Some other companies that release results or interesting announcements, including 2 companies that released their Appendix 4C when I was recording the video on the 24th. Those were BSA Group and Donaco. I should mention both of those companies because both of those companies are operating cash flow positive. And if you're a really big risk taker, Donaco could be a company for you. And I'll talk about why. Hillgrove Resources released their 5B. It is a copper company. They've just gone to production. So this is the first signs of how efficient they are in their production. I'll probably want to wait till the next quarter just to see how or if they can become highly operating cash flow or free cash flow positive because they're just not there yet. URW, which is Unico something Westfield. Let's have a look. Unibail-Rodamco-Westfield. They released a trading update or something. Yeah, trading update today. So they, So whenever a company releases a trading update, it will always be in contention to be one of the top 5 announcements of the day. Capricorn Metals released their 5B. I might have a quick look at that company because the 5B was, I wouldn't say disappointing because I don't follow the company all that closely, but on the surface, the numbers looked weak. So it'd be interesting to see how the share price has reacted because I do think gold is up today. A company called GTN also released a trading update. Also talk about which is ECL, which is Excelsior Capital. Yes, Excelsior Capital. They released a really interesting announcement, and I really wanted that company to be in the top 5, but it had to miss out. And Grange Resources also released their quarterly report. So I might touch upon some of these companies after the top 5 announcements later in the video, but I don't want this video to be more than 1 hour long. Preferably, I would want these videos to be at the maximum 30 minutes, but I sometimes tend to ramble on. And then we'll have a look at some charts. And to be honest with you, I have no idea what to look at this point in time. So let's have a look at some interesting tweets. Now, I find these interesting. You might not. The first one is from Bar Chart, which is, and maybe I'll just zoom in a bit, which is, I get an email from Bar Chart, at least 2 hours of Bar Chart every single day. And this was a fairly popular tweet, I believe. Yeah, 104,000 likes. No, 104,000 views, 840 likes, 159 replies, and 260 retweets. In respect to Jamie Dimon, who is the CEO of JP Morgan. I've heard this name, Jamie Dimon, a lot in the past year. And it wasn't that long ago, October, where he said this may be the most dangerous time the world has seen in decades. Now he's really bullish about the American economy. Jamie Dimon says US economy is unbelievable and booming. He said stagflation could be coming. So I mentioned stagflation at the start of this video, and I'll talk about stagflation again. So that is a possibility moving forward, just based off GDP numbers that we saw released earlier today. And then we get to people talking about Microsoft and Google. Google and, Alphabet and Microsoft save the day, not only from Heisenberg, but also Jessica Blansky, actual footage of Alphabet saving the market. So again, in aftermarket trading, share price of this company is up 13%. And I'm not complaining because I'm a shareholder of not only Alphabet, but also Microsoft, 2 companies who could one day rule the world. And I'm being just a little bit dramatic when I say that. Another Twitter I like is App Economy Sites. They release these really interesting income statements, slides, I don't know what you call them, thingies, graphs, just telling you all the different divisions of a company, all the revenue they create, and then going from revenue all the way through to net profit. So you go revenue, gross profit, cost of revenues, operating expenses, operating profits, and then we get to net profit, and then taxes, R&D, S&M. I'm pretty sure that's not the S&M I'm thinking of, and a G and A. So a really good performance from Alphabet. If you don't know what Alphabet does, well, Google, but they also own YouTube, and Google Cloud has been performing really well. Google Play has been performing really well as well. But overall revenue for this company up 15%, operating profit up 32%, up 7 percentage points. So a really good quarter for Alphabet. And what else do we have here? What else? Oh, there's Microsoft. Yeah, so Microsoft, it looked a little bit weak because revenue based off or compared to the most recent quarter was down, but compared to 1 year ago, revenue, might as well just increase this. So revenue up 17%. So these are all the different divisions of Microsoft. We have server, office, gaming, Windows, which is becoming a bigger, gaming up, revenue up 51%, Windows, LinkedIn, search, and other. So have a look if you do like Twitter, and I actually do like Twitter or X, whatever they call them these days. And the main reason I like Twitter is a lot of these experts are on it, and you get a lot of different opinions and a lot of nice stuff, exactly like this. So it's actually a really good source of information. And there we go. Oh, and the other big news in regards to Google or Alphabet, they are paying their very first dividend. So there has been a little bit of a chatter about this. Someone did mention that this sort of company wouldn't want to give a dividend or provide a dividend to the shareholders because that would mean they're no longer growing. That's not exactly true. And I think this is just a token dividend. But again, and I've stated this many, many times, dividend suppresses innovation. And to get that to that point, you think when a company brings in a lot of money in their business, they have many options what to do with that money, including dividends, share buybacks, research and development, acquisitions, all that sort of thing. So most of the biggest companies in the world, the fastest growing companies in the world, don't give dividends to the shareholders. They put that money into research and development to grow the company in the future. In Australia, because investors are so obsessed with dividends, many companies go straight to dividends. They don't care about growing the company. Now, that's not true for all of them, but many companies do that. And now, I don't mind a token dividend, a small dividend. And I just don't want to invest in companies that have a payout ratio of greater than, say, 50%. In my opinion, that means they're not thinking of growing in the future. So that might be a little bit controversial. In fact, someone at work said to me, this was only a few weeks ago, the way I invest is if a company doesn't pay a dividend, that's real investing. And so real investing is buying those companies who pay a dividend, and speculating is buying those companies that don't have a dividend. So that means Berkshire Hathaway is a speculation, not an investment. And many of these bigger companies in the world have been speculations, not investments. The complete opposite. I would rather buy companies who don't pay dividends, who are focused on growing the company for the future. That's how you get the really intense big growth. Okay. But so I don't mind this dividend. I think it's just a token dividend, to be honest with you. This was a really interesting one. Forward PE ratios for some of these companies, and they're not that much. Whoops. They're not that much. I wanted to expand that. There we go. They're not that much. Alphabet's only at 22 times. Meta 24 times. Someone actually mentioned here, Meta's probably down more because the share price fell 10%. Apple 25 times. Microsoft 32. I probably would say Microsoft is probably the richest valued of these, even though Nvidia is 32 times, because I think Nvidia has the potential to grow significantly more over the next 5 years. Amazon, you can never really look at the P ratio of Amazon. That is a classic example of a company really taking all the money they create in the business and putting all that money into growth. And I didn't care about profit for the longest time. And Tesla 63 times. So Alphabet only 22 times for a company that is growing. And just compare some of these PE ratios. These are forward-looking PE ratios. Just compare some of these PE ratios to some of the PE ratios of tech companies on the ASX. It's ridiculous, some of those. And I am a shareholder of some of those companies like WiseTech, Pro Medicus. They all have a PE ratio greater than 100. Even the forward PE ratio, more than likely, is greater than 100. So these big companies in America aren't that expensive, to be honest with you. All right, and let's have a look. What else we have here? Earnings Whisper. Another one I do like is Earnings Whisper. I'm pretty sure I showed you your email get from Earnings Whisper. And this is talking about the conference call. So have a look out for this. It's interesting because I had a little bit of a little bit of go at Meta. So Meta has got to spend to catch up on AI because they were playing in the metaverse while we've been working on AI since 2016. And one of the reasons I did tag a position in Alphabet is just because of AI and the potential of this being one of the companies that will win big in the future. I'm not sure exactly which company. If I had to guess, I'd say Alphabet, Meta, Microsoft would be the leaders at this point in time. I like some of the investments Microsoft has made, but there could be a company that's coming under the radar that just could become the big company. Nvidia is also a company I own because of AI. So what else do we have here? Oh, and the last one was from Kobe Sileta. So this is a very popular tweet. I just noticed 2.2 million views, 8,300 likes, 572 replies, and 3,100 retweets. So I actually do like the tweets from this Twitter account. Where is it? The official Twitter account for the Kobe letter, an industry-leading commentary on the global capital markets. 500,000 followers, and they only follow 510. So if you're one of those people who they follow, you'd be very happy. Anyway, So this is regards to what happened to GDP numbers and inflation and the possibility of us moving towards stagflation. Maybe not us, but America moving towards stagflation. They say it really well here. For those who do not understand what just happened, this is after release of the GDP numbers. First quarter GDP growth slowed to just 1.6%, which is less than half of the 3.4% in the fourth quarter 2023 number. This reading is roughly 50% below Goldman Sachs expectations, which is important in itself. But it gets even worse. At the same time, the US core PCE price index soared from 2% to a staggering 3.7%. This crushed estimates of 3.4% and further suggests that inflation is on the rise. So we have a weakening economy with rising inflation, the worst possible outcome for the Fed. Stagflation is the worst possible outcome for everyone alive. We don't want to be in a time of stagflation. I haven't had a look at this particular graph. They just say stagflation here. Moving towards stagflation, possibly. Who knows? I'm not going to say that right now. I haven't even read any replies. In fact, they've replied to themselves, which I've done occasionally. What does the Fed do when inflation is rising but the economy is weakening? Exactly. If you cut rates, inflation will skyrocket. If you raise rates, economy crashes. Not exactly the definition of a soft landing. I was going to say lofts landing. Okay. And then not Jerome Powell said the Fed is, well, we know the word that comes after the Fed is FU. Anyway, so that's all the tweets I had. A lot of interesting stuff on Twitter. And I'm finding myself going to and looking at Twitter more and more these days, but just because of the amount of information on there. But the problem with Twitter, and I know Elon Musk has this problem, is just the amount of bots. For instance, let's go to X. Okay, that's Oklahoma. So that's an ad. Oklahoma, yep. So a lot of NFL draft stuff here. It's Karma Shopping. It's talking about Google. Time capsule tales. Actually, this is interesting. I don't mind looking at videos of something that's really old. But a lot of ads, a lot of bots here. Australia government infrastructure. I don't care about that. Bar chart. And the early today, it was just one after the other of just these bots and crap I just don't want to see. So that is a problem when it comes to Twitter. Probably the only problem I have. Biden Treasury Department says we need higher taxes on capital gains because it will hurt white people more and take away their wealth. Whites own too many stocks and businesses, so they need to pay. Interesting. I won't say anything about that. I noticed Canada raised their capital gains taxes. Maybe we'll be next. And I won't be a fan of that at all. Okay. So let's have a look at the ASX today. Everything's in red, except I think I said gold. So to confirm that, let's just zoom in a little bit. To confirm that, let's have a look at the sectors and indices. And yep, gold's up. So every single sector is down and down big. Industrial's down 1.9%. Real estate down 1.9%. IT, not as bad, only down 0.46%. Healthcare down 0.6% and staples down 0.62%. I forgot to show you this there. XJR down 1.21%. Still 1 hour trading left. Small orders down 1%. Resources down 1.3%. But if you look at different indices, gold up 3.3%. So I probably should have a look at Capricorn metals, because if that share price is down just a little bit, that would be a good sign. The market did not like what they produced or the quarter they produced. Small orders only down 1%, and ASX 20 down 1.6%. What I'll do is just open this up a little bit more. Is there anything else in green? No. Emerging companies, not that bad. Industrials down 2.23%. The XNJ, XPJ, the 200A REIT down at 2.05%, and real estate XRE down 2.03%. Let's have a look. The XTL, which is ASX 20, but I did not see that. If I go back, oh yeah, okay. So let's open up and look at the best or the biggest 20 companies on the ASX. Now, BHP is down a fair bit today. So that company did come in at number 2 on my top announcements of the day. So just the very fact that BHP is down, which is the biggest company on the ASX, just means by probability we're going to be down, or we're going to be having problems today. In fact, BHP is down 4.57%. So most companies are down apart from two, Rio Tinto and Fortescue. So iron ore must have had a pretty good day as well. But every other company is down. Transurban down 3%. So sometimes people like to go to these infrastructure companies because of stability, because of defensive nature. Transurban, which is an infrastructure company, down 3%. Not much stability and not much defensiveness there. And some of the other companies down, yeah, they're all down. Banks are down. Well, banks didn't have that bad of a day, but CBA down 1.61%. ANZ down. And yeah, so a pretty negative day in the market. Something else I like to do is in ComSec, just put in an indice. So for instance, a small orders down 1.23%. And there should be an index makeup. And then you can just go through this by change to see the best performing companies and the worst performing companies. So yeah, Grange Resources. Maybe I should put that into the top 5 announcements. That is the worst performing company in the small ords, down 6.36%. We also have some fund managers here: Magellan, Platinum, Insignia. Yeah, Boss Energy is there as well. There's Sayona, which did come in number 4. And that's understandable. Mass Group, Polynovo, Novonix, and Nick Scali up 12.65%. I'll discuss why Nick Scali has had a good day later in this video. And then the rest of these, or a lot of these, are gold companies or miners. And there's silver, Vulcan, Red. Vulcan, I'm pretty sure something to do with lithium, something like that. Red 5, Resolute. So gold companies. Many gold companies. There's WAF. Ordinate is up. 360 is up. That's interesting. Zip's up. Mesoblast is up. So some interesting companies in the up portion. Anyway, that's all I got for the ASX today. So an interesting day on the market. And after trading has finished for the day, what I usually do is I go through the charts, look for some interesting patterns in the charts. So I take at least 2.5 days to do that. Not, 2.5 days completely. I don't spend my nights doing that. I'm talking about on and off over the next 2.5 days. I'll go through some charts. I might spend like maybe 20 minutes at one time going through some charts, maybe 10 minutes at another time. I don't do it in one go. Put it that way. I take 2.5 days to do it because the market is closed until Monday morning, unless it's a public holiday, but it's not because we just had a public holiday. Anyway, so that's the ASX today. Let's have a look at the best gainers and the worst performers, or the top gainers and the top losers. Plenty of time. I want to finish this video by 4, and just based off closes in, you should know the time is 3:12 local time. So plenty of time. And should I even do this? Because I've already had a look at some of the ASX 20, XSO. So what I might do is I'll just go through by market cap, because I can't really see anything there. So go by market cap. We have Resmed coming in number 1, Newmont coming in at number 3, Perseus, Nick Scali coming in number 5. So actually, even though the market is down, there has been some good news stories on the ASX. And then Perseus, which is a gold company, West Gold, Latin, pretty sure that's lithium, Ohm Holdings, no idea. Southern Cross Gold. I'm trying to find anything else here that I might have missed. Nothing at all. Let's have a look at the worst performing companies by percentage change, very low turnover, very low market cap, so nothing of interest right here. Pretty sure Rox Resources did an capital raising, so that's no surprise. And Pure Profile, Mighty Craft, nothing there. So by market cap, Immutep, Crisis Corporation. I'm going to have a look at the chart for this company. Yep, this is what happened. So I have 2 Google Chrome, not accounts, whatever. But if I have TradingView open in one of my accounts, and then I open up in my other account, it just says, do you want to disconnect because it's open in another machine or something? But it's not. It's the same machine. It's just 2 different accounts. Anyway, so I'll have a look at Crisis Corporation chart because I do like this company, but for the first time in many months, maybe even years, the share price of that company looks fairly weak. I want to have a look at the chart for MLX. I also saw that share price down. I'm a little bit surprised because that company mines tin, and I'm pretty sure tin was up. Duratec. So I traded Duratec not long ago when the share price got to about $1.04. Then I sold when the share price got to $1.15. Now the share price is below $1, and I think there might be some value in that company or getting close to value. And otherwise, there's no massive companies in here, no big companies. So, so I'll look at charts for these three companies. Okay, so that's all I got for ASX today. Now let's turn our attention to the announcements. So I've already really gone through Microsoft, Google, Meta. They just released their quarterly results, and to be honest with you, pretty positive reaction from the market in regards to Alphabet and Microsoft. The negative reaction from the market in regards to Meta was a little bit overstated, and I bought on open. So let's have a look at Meta. In fact, we'll have a look at all these charts for these three companies, and then I can tick it off. And yeah, so there's Meta, and the low was in the first minute or so, within the first 5 minutes or something. Yeah, within the first 3 minutes. So I bought on open or near open. So I nearly bought at the low, and I just thought pre-market said Meta was going to be down about 15%. I looked at my numbers. I went, yeah, I could buy Meta at 50% lower than what it is. So I just put in a bid on open, and I'm happy that holding is already up 5%. So I've got to be happy with that. And overall, the chart still looks positive, and this is still a little bit of a blip, but it's not the end of the uptrend for Meta. I just wished I took a position in this company back in late 2022. I started buying American companies in 2022, and this should have been on my radar, but I hadn't done any research on Meta. I hadn't really performed a diligent amount of research on this company, and I wish I had at that point. That's one of the reasons, one of the good reasons why doing research on companies that you don't own can be helpful, and just having a watch list of companies you love to own. And when you see the share price fall like this, yeah, and even if you didn't board at the bottom, you still could have bought at this breakout. There was a definite breakout on the 2nd of February 2023. Share price on that day rose 23%. And you notice the share price then fell like 2 weeks after that, and then it moved back into an uptrend. So beautiful pattern at that point in time. I wish I was trading a little bit more then. I really got into trading probably the middle of last year, and after testing it for a long time. Anyway, and the other two companies, we have a look at Microsoft, which is MSFT. And yeah, this chart looks pretty good. We had a little bit of pullback late last year, back into uptrend, a little bit of pullback in the last 2 weeks. And I'd say there's a chance it's going to go back into a really nice uptrend. That's when I bought. 263 when there was a breakout. There was a definite downtrend in Microsoft. Definite downtrend. I was watching this one. And as soon as it got out of the downtrend, you can see it get out of the downtrend about 6 trading days before I bought in. And even though it slipped after that, it touched the downtrend and took off after that. Beautiful technical signal. And the other one is Google, and this was me just buying Google. Oops, got to get the ticker code right. This is me just buying Google when I saw value. That was at $98.91 in September 2022. Was not the low. The low was $84. So I could have bought even lower than that. And I was in the red for about 6 months before it moved into an uptrend. If I just waited for it to go into an uptrend, I could have bought it at a higher price in May of 2023. And this chart looks pretty good. Look at these little dips. These little dips, a little bit of negative sentiment in the company, and then the share price goes higher. Now, before I move on, Nasdaq, I did discover something yesterday. Nasdaq, calendar. Nasdaq, that's how I found this one, Nasdaq calendar. I just wanted to see a results calendar. And I found this really useful earnings calendar on the Nasdaq site. It's not only companies listed on the Nasdaq, it's companies also listed on the New York Stock Exchange. And they have day by day here. So today we're going to have ExxonMobil, Chevron, AbbVie, which is a market cap of 296 billion. I don't know what they do. Fomento Económico Mexicano, a card company or something like that. Bank. Colgate Palmolive is releasing their results. Phillips 66. So it seems like all the oil companies are releasing. But if we just go back one day to Thursday, we have Microsoft, Alphabet, Merck Company, AstraZeneca, Caterpillar, T-Mobile, Comcast, Intel released their results. Or I have heard that those results missed expectations, so the share price should drop. Bristol Myers Squibb, which I only did a bit of research recently, it looked cheap. They released the results and missed expectations. And I saw Atlassian down here too, down at 51 billion. The really good thing about this, the reason I love this site is they have the company, the market cap, consensus earnings per share forecast, number of estimates, last year's report date, and last year's earnings per share. And they tell you if the results missed it. So if you go back one day, Meta, so that was Meta beat expectations. So surprise, 9%. So consensus earnings per share forecast, $4.32. Earnings per share, $4.71. Now, I don't only like looking at earnings per share. I also looking at revenue and all those things, capital expenditure. And I just went back through all these days in April, and there's just so many companies that you've heard about. So for instance, let's go all the way back to April the 1st. Now, even though I've never heard of PVH Corporation, they own, I'm pretty sure they own Tommy Hilfiger and Calvin Klein. Market cap 6.5 billion. AST's Postmail just sounds really cool, but that's a market cap of 547. It's not profitable. Tuesday, April the 2nd, we have Paychecks, and then Kale Main Foods. Dave and Buster's Entertainment bought Main Event from the company that owns Dreamworld and such. A market cap of $2 billion. And then the next day we have Levi Strauss and BlackBerry. Yes, BlackBerry is still around. They don't sell BlackBerry, they sell cybersecurity stuff. Still has a market cap of $1.7 billion. So earlier today, I was just going through all this and just going, wow, so many companies I've heard of. And you can see, like Friday, the 5th of April, there was not many companies releasing results that day. Only 4 companies. And again, this includes not only Nasdaq, also includes New York Stock Exchange. And we can tell the difference because Nasdaq companies have like 3 or 4 ticker codes, or maybe it's 4 ticker codes. Well, for instance, if we go to Levi, I'm pretty sure Levi is Nasdaq and BlackBerry is New York Stock Exchange. So BB is New York Stock Exchange, and I'm pretty sure that's how it works. I'm not sure about 3 letters. That could be either one. So that's me learning, and I'll be honest with you, I wouldn't be surprised by 2030 that the majority of my holdings are in international companies or companies listed not on the ASX. I am transitioning that way because the best companies in the world are not located in Australia. That's pretty obvious to me. Anyway, let's have a look at announcements. And coming in at number 5, or should we do the companies that didn't quite make it first? No, let's do the companies that didn't quite make it. Okay, so let's go back to the 24th. Company called BSA, which I have no idea what they do. Seems like they're in telecommunications. So it says here industrials, commercial and private services. And I had a look at their Appendix 4C, and to be honest with you, I came away from it going, okay, there could be something here. So BSA, something to do with telecommunications. They sell internet plans or something like that. Formerly Comet Satellite and Cable Limited, technical analysis, contracting company that has successful long-term relationships. Doesn't tell us what they do. They do it there at all. Anyway, so whenever I look at Appendix 4C, I skip the commentary and I go straight to the numbers. This company had receipts from customers of $74 million in the quarter, $213 million so far this year, and the company is operating cash flow positive, $5.3 million so far in the year. So I had a look at that. I went, that's interesting. I have never had a look at this company before. Should I? Repayment of borrowings. They repaid $4 million in borrowings in this quarter alone. And so far, looks like they have looks like they have no debt left. They do have $15 million in unused financing facilities. So what this company does, what does this company do? Australian-owned and operated ASX-listed company with over 25 years experience delivering fixed line and wireless telco services, smart metering services, and premium EV charging solutions. Okay, so BSA provides services to Australian household brands including NBN, Foxtel, and Telstra. Yeah, so I have never heard of this company before. Well, I have heard of it, but I've never had a look at it. And to be honest with you, I've heard most of the companies on the ASX, but just because I've heard of it doesn't mean I know what they do. So let's have a look at the chart for BSA. Does this look interesting? Potentially. I reckon this potentially will look interesting. Share price was in a long-term downtrend. Share price now going sideways and possibly trying to break out. I am going to put this company onto my watch list. Might do a little bit more research on BSA. The last thing I should look at is the markup of the company, $50 million. Remember, they had $5 million of operating cash flow in the year to date. That's 9 months. So possibly $7 to $8 million of operating cash flow. Maybe they do spend a bit of money on capital expenditure. That's one thing I actually didn't have a look at. Let's have a look. Capital expenditure, not much, $234,000 in the year. So capital expenditure light, which means they're free cash flow positive $5 million. $5 million in the first 9 months of the year. Definitely or possibly a company to have your watch list. Is it liquidly traded? Probably not. So 13 trades today, but that's okay with me, particularly if a company might be undervalued. Now, according to CommSec, the P/E ratio of this company is 5.4. Yes, 5.4. Dividend yield 11%. Does this company have a dividend? Well, so I'm doing research on the fly here. So according to CommSec, no, they don't have a dividend. So the last dividend was in 2021. Okay, so that's interesting in itself. Okay. Now on to, looks like the market's still falling. XJO is down 1.4%. Next company is Donaco. Donaco. For those who like risk, this could be the company for you, not only because of where this company has operations, but also because of what this company does. This is a casino company, casino owning company. Okay, so before I move any further and tell you where this company has operations, let's have a look at their Appendix 4C. The numbers. Okay, in fact, let's have a look at the market cap of this company first. $45 million. So keep that number. I don't know if they have any debt, but we can see that in a second. So Donaco, the ticker code for this company is DNA. Okay, receipts to customers, $13.3 million for the year-to-date, $35.4 million. Operating cash flow positive by $4.6 million in the quarter, $13.4 million in the year-to-date. Remember that market cap. Not much capital expenditure, finances, not much going on there. So let's have a look at the debt or cash on hand. They have $28 or $29 million of cash on hand. Yes, $29 million of cash on hand. That's increased from $16.7 million at the start of the financial year. Now let's have a look at the debt. So they do have a little bit of debt, $18.6 million of debt. That might be okay. Interest rate 6% with Lee Bug Hu. Okay, so why does this company look really cheap based off the numbers I'm telling you? So this is a casino. Apparently, according to this, the casino is called Star Vegas. Straight away, that turns me off the name. But they have operations, I believe, in Cambodia. Okay, here we go. Donaco's DNA Star Vegas operation situated on the Cambodia-Thailand border recorded net revenue of $8.82 million. Property level EBITDA of $6.63 million. And they have another, according to this, casino in Vietnam. Aristo International Hotel saw an uptick in revenue and EBITDA, flowing from stabilized tourism, primarily from China. A revenue of $3.84 million doesn't seem like a lot of revenue, so these must not be big hotels. Now, there was a time when this company was a little bit of a market darling. And this was back in 2014? Yeah, 2014. And the chart doesn't look that good. So that's one thing against Donaco is the chart doesn't look that good. But if you're just a value investor and don't mind taking a bit of a risk, maybe this is the company for you. So let's have a look at the weekly chart. And the share price of this company got as high as about $1.50. $1.50 back in, it was earlier than, March 2014. And you see the share price went on a beautiful run back then. So this was, I wouldn't say the talk of the town, but there was a fair bit of interest in this company back then. And yeah, the share price has been under pressure since then and fell all the way down to a low. What share price was the low? About 2.5 cents or so. And so the share price isn't that much higher than it is right now. I know. So possible value, but I think that I'm not the biggest fan of buying Chinese-based companies and even Southeast-based, Asia-based companies, even if there is seemingly value there. And that would be a significant turnoff when it comes to this company, just where they have the casinos. And we just don't know. There could be legislation against casinos in these countries. We don't know that. So there's that regulation risk and just the geopolitical risk as well. Who knows what's going to happen in those countries. And yeah, many other things, many other reasons not to like Donaco, but valuation is not one of them. Chart is one of them, but valuation is definitely not one of them. Okay, so that's DNA. I won't talk about Hillgrove. Nothing to get too excited. Just going to have a look at the share price movement just to see if it's gone up or down. Now, it's relatively flat, so there's no reason. The market wasn't that concerned. URW, I had a quick look at this trading update, and the market's like, oh hum. They're a little bit more than I thought they were, just based off this little, here we go, this little table here. So they have shopping centres, offices and others, and convention and exhibition. And that revenue, convention and exhibition, up 54% in the past year. Offices and others up 13%, and shopping centres up 2.6%. By far, in terms of revenue, shopping centres is their biggest driver of revenue. But convention exhibition up a fair bit. I'd like to know the margins. Do they have margins here? They haven't got margins. That's one thing I'd like to know, is how much greater the margins are in convention and exhibition. I would assume it's much better margins, but I could be completely wrong. And let's see if they do talk about margins here. No, they go into different geographic regions, which is okay. Not that I'm going to take a position in this company. I just I've never looked at this company in the past. I do know the Westfield part, and they own Westfields, but I didn't know they were a little bit more than Westfields and shopping centres. So have a look at Unibail-Rodamco, and we should have a look at the chart, because another reason I had been looking at this company was just the chart, and I should have bought some shares in this company when it broke out back here. It gave me a signal, and I would have bought it, say, 460, share price now 620. That would have been a nice little trade. So let's have a look at the weekly chart. And in the weekly chart looks pretty good. There's a little bit of there's a high here we saw back in 2021 at 646, and it's just shy of there. So if we get, or share price of this company gets above there, we're talking about a multi-year high. We're talking about a 4-year high after share price was in a well-defined downtrend. So things might be turning around for this company just based off the chart, the weekly chart in a nice uptrend, daily chart in a nice uptrend as well. So it's Unibail something, Rodamco-Westfield, just call it yourselves Westfield. Capricorn, this is going to be an interesting one. So I was a little bit underwhelmed by this company's Appendix 5B, their cash flow report. There could be reasons behind that, including weather-related reasons why numbers seem down. But was the market anticipating that? If the share price is up, say, 2 or 3%, the market anticipated these weaker numbers. If the share price is down, or maybe up slightly, then the market probably was a little bit surprised. Oh, down 1.21%. When gold is up, what was it, 3.5%? This is a disappointing day for Capricorn metals. So what am I talking about? A little bit weaker than numbers for Capricorn metals. Oh, of course, you're gonna take ages to open up. Oh, sometimes I really hate ComSec. So let's have a look at GTN. In fact, instead of looking at that, I'll just open up this announcement. It'll probably take 5 seconds for this announcement to open. Yeah. No, it just stalls. Still opening. I just look at how long it takes. Just if I went to the ASX website, this would be open up in less than 1 second, a split second. It's to do with ComSec. You think like ComSec would have its stuff together, but no. Oh, yeah. Yeah. So I just went through some of this commentary. I had a look at the numbers, and the numbers didn't impress me at all. I just had to look at some of these numbers. So gold production was down. So 26,000 ounces, down from 30,000 ounces last quarter. All-in sustaining costs were up. That's the other thing I did notice, up to 1,515, up from 1,333. And I've always thought of Capricorn Metals as being a low-cost gold producer. So maybe that thing has changed. But they did mention here, so all-in sustaining cost was impacted by lower production. So straight away we can see, we know they have low production, and high strip ratio as a result of weather impacts on mining activities. That's the big one. This could be just a short-term issue for the company, and I thought the market would be more aware of that. Okay, so maybe not. And let's have a look at the chart for Capricorn. Is it any reason to get excited? Probably not. Okay, so this is the weekly chart. In fact, bad week for Capricorn, down 6.8%. Okay, so the weekly chart looks pretty good. Just coming off, pulling back from all-time highs. So the daily chart, yeah, this is just a little bit of a pullback. This area between these two dotted lines or dash lines is an area of resistance. I don't think we can call that now, but the share price has pulled back a little bit. And yeah, I don't know. I don't know about Capricorn Metals. Possible overreaction from the market. GTN. So GTN did release a trading update. So I'm pretty sure, I could be completely mistaken, I'm pretty sure GTN owns radio stations, and they're expecting better numbers than last year. So EBITDA, they're expecting that to be between 21 and 23 million. Last year was 19.3 million. Revenue, expecting that to grow between $8 and $10 million from last year. So they got revenue from the operating regions in Brazil and United Kingdom. So if I'm right, and they do own radio stations, they own radio stations all around the world. Now, a lot of times the company will have an about section, but GTN doesn't have that. So let's have a look at market index to see if I'm right. Okay. They don't really say that. Maybe they're more advertising than radio. I've always thought of this company as being radio, and because I've always thought of them as being radio, I've never really paid them any attention. Maybe that's wrong. Maybe they're more in advertising. If you don't really know, you could always go to the website, I suppose. ASX. Global Traffic Network. Here we go. Is this it? Largest broadcast media advertising platforms. Okay, so media advertising, not necessarily radios. Largest supplier of traffic information reports to radio stations. That's probably where I got slightly misinformation. They provide traffic information to radio stations. That's interesting in itself, but not necessarily buy for me. But let's have a look at the chart. If the chart looks pretty good, maybe this could be a buy. I'm assuming the chart doesn't look that good. Yeah. Weekly chart, long-term downtrend. Share price has been going sideways for the last 4 years. Yes, share price has been going sideways for the last 4 years. So if I saw a consolidation period that goes 4 years long, I would be paying attention to that company and the movement of the company and release of financial results, because if the share price moves into an uptrend, oh, that uptrend could be absolutely wonderful after a 4-year consolidation period. Okay, that's GTN. And you have one company left to go before we get into, no, two companies left to go before we get into the top 5 announcements of the day. The second last announcement before we get there is Excelsior Capital. Share price up 3% today. And, oh, they've had 2 announcements today. So this is a company I own recently, and then they sold one of their divisions. So they sort of own this company, this electrical company, and they're also some sort of like a very small fund manager or something. They sold that electrical company to IPD Group. and all they got left is sort of like the fund manager side of the business. And then they released this announcement today: application received to wind up the company. So one of their big shareholders has said, we don't like what you're doing. Let's just take this money and give it back to the shareholders. In fact, this shareholder, maybe not one of the largest shareholders, but this shareholder, which is also listed on the ASX, London City Equities, has served or have applied to place the company into liquidation. Their application has been filed in the New South Wales Registry of the Federal Court. So December 2016, shareholders of the company voted to approve the company's status as an investment entity. So when they sold out of that electrical company, I completely sold out because I didn't like the direction they're going, because I'm not sure how successful they're going to be. So London City Equities, you should have sold out. Why not just sell out if you don't like the direction? And the board said they are disappointed that this action will cause further disruption, and they don't think this will be this application will succeed. So interesting goings on with the Excelsior Capital, company I don't own right now. I'm not going to even look at the chart. No, let's have a look at the chart. I think the share price is going sideways because I sold at around about $3.25. In fact, I sold on this little spike back on the 28th of November at about $3.25. The share price actually has moved into it's still in an uptrend. The chart actually, if you look at this chart, it actually does look pretty good, but you can tell that this company is liquidly traded just by this chart, but it's still in an uptrend. And that's why sometimes, even if the company is liquidly traded, it's not a bad thing because they can still be in uptrends, but it's a volatile, wild ride. And finally, Grange Resources, and down 8%. Okay, this could have featured in my top 5. I didn't expect this, but in my defense, they released their quarterly report just before midday, so I missed this one until I came back to the computer, and I didn't really see what the share price had done. So their quarterly report, and I had a look at it, and I went, "Oh, this looks pretty weak." And yeah, it looks pretty weak. So the first thing I looked at is sales. So pellet sales down, concentrate production decreased, average prices dropped. So everything looks negative, or everything sounds negative. Unit cash operating costs increased. So you want these completely the opposite. You want to see concentrate production increased, pellet sales increased, average received prices increased, and unit cash operating costs decreased. But we had the complete opposite. And I even think the cash on hand fell. I think so. And the market hasn't liked it. So share price down by, do they have a cash report anywhere in there? I didn't have a look for that. Sales, no cash report. Okay. So let's have a look at the chart for Grange. And to be honest with you, the chart wasn't looking that good before this report. So there was no reason to think about buying this company. So share price in a gradual downtrend. So slowly going down. No reason to get excited. And you can just see the share price. All these highs are slightly lower than the previous high. And probably the only saving grace is this low in December last year has not been beaten, or we haven't seen the next lows go lower than that low, which was about 38 cents. But that might happen in the next few weeks because of what happened with their quarter report today. Okay, let's have a look at the top 5 announcements of the day. Starting at number 5, we have Nick Scali. I'm just going to 205. Just going to see if there's been any other Appendix 4Cs released since I started talking. Probably have been, but I can't see anything there of note. No. Okay. Actually, I can get rid of that. Okay, so Nick Scali. I'm a little bit shocked about this one. The Nick Scali share price up 12.5%. So they went into trading halt on the 24th, which was the last trading day, in regards to an equity raising and acquisition. And I can tell you the acquisition was not 12.5% higher than what the share price is now. And as a shareholder of this company, this makes me more inclined to take part in this capital raising. So this capital raising, so 1584, the share price of this capital raising would be like $13, I'm assuming, something like that. Might be even lower than that. Where is it? $13.25. So why wouldn't I participate in this capital raising? So obviously, the market loves this acquisition. I thought, the fool I am, that the market might be a little bit skeptical about this particular acquisition, but the market likes it. So just because the market likes it doesn't mean this acquisition will be a good thing for the company. I'm pretty sure when Slater & Gordon made that acquisition of that English law firm back in 2016, I'm pretty sure the share price of Slater Gordon went up initially. The market liked it. Anyway, so the market likes Nick Scali, this acquisition. Let's have a look at the chart. Okay, this is a nice looking chart. In fact, the share price went to an all-time high today. Oh, not quite. Oh, look at that. Oh, look at highs back then. Just put a line there. And the share price struggled to get above that high. That's perfect. Look at that. We had a high back in November 2021. The share price has just reached to that level. Otherwise, this chart looks pretty good. Daily chart looks pretty good. A little bit of weakness here, nice little pullback. Share price has rallied on the back of this news. So as a shareholder, I will participate in Nick Scali's capital raising, unless the share price absolutely tanks before I make my decision. And I wait to the very last minute, by the way. And the reason I do that is Drone Shield, share price 4 cents higher than the equity raising. But if the share price falls to 79 cents, I will not participate in the capital raising for this company. Coming in number 4, we have Sayona. Sayona Mining, share price down here 5.9%. So they released their Appendix 5B today. So this is a lithium producer. And my big question, I don't know anything about this company apart from the lithium producing. The main thing when I had a look at this is, why are they still producing lithium? Because why have they put their mine into mothballs? Okay, so receipts of customers, $29.5 million. Operating cash flow negative by $51.2 million. But not only that, production cost of $67 million. So receipts, $30 million. Production costs, $67 million. So you might say that's just a one-off in this quarter. But year to date, $152 million in receipts, production costs, $159. So they're not getting anything from their mine. Why? I just don't understand. Maybe can someone, if you know anything about this company, explain why this company is still producing? Because based off the production costs, this company it just makes more sense not to be in production. So I could be completely missing the story when it comes to Sayona. But even if you go back up to here, so average realized selling price, 999 DMT, unit operating costs, 1,536. Unit operating cost is significantly higher than average realized. I don't understand this at all. I don't understand this. It just seems weird that a company is mining something out of the ground and spending more money to get that out of the ground than they're realizing in selling that product. It just doesn't make sense to me. Anyway, there's no reason to be in Sayona right now because of the chart. Again, the chart tells all. Share price in a well-defined downtrend. Share price keeps on falling. No reason to be excited about this company. And the market cap of this company is now $350 million. I'd say, wasn't that long ago, share price 38 cents. The market cap of this company would have been closer to $4 billion than zero. Anyway. That's Sayona. Something I just don't understand. Why just put the mine into mothballs? I don't know. Maybe I'm wrong. Maybe it just costs way more to start the mine up again. Okay, coming in number 3, we have Newmont. Now, I knew this would be in the top announcements of the day. It's not new. It's NEM. I knew this company will be up about 13% because this company is listed on the New York Stock Exchange, I'm assuming, and overnight the share price was up because their results beat expectations. So on the New York Stock Exchange, share price of Newmont was up 12.46%. And here they're up 13.17%. So it's just their results. I'm not going to have a look at their results because it beat expectations. In fact, I did see one tweet, it beat expectations by 50%, which is weird. This is a gold company. And usually these sort of companies, these mining companies, don't beat expectations by that much because typically these companies have a massive amount of analysts following them, and usually they're not that wrong. But so the New York Stock Exchange chart starting to look interesting. This could be a breakout. This could be the definition of a breakout. So good financial news, share price at least at a 6-month high, and higher volume. So that's Newmont. That's on the New York Stock Exchange. And then on the new Australian Stock Exchange, is this a breakout? Yes. Hasn't been trading that long, but this is all-time high for this company on the ASX. And this is a definition of a breakout. I'm just surprised that the analysis missed it by so much. Maybe there's a reason behind it, but share price is up. Okay, so a company that's been in the news a lot has been BHP. So I read yesterday, because this is worldwide news, that they were acquiring Anglo American, which is, I want to say it's listed on the London Exchange, Anglo American, Anglo something, Anglo American, yeah. It might be dual listed. Wouldn't be surprised if it's dual listed. LSC and New York Stock. No, is Anglo American. There it is. LSC. Oh, the chart looks beautiful. And the share price of Anglo American popped up 16.1%. Why? Because of this acquisition. And BHP have sort of confirmed that. Response to announcement by Anglo American. Well, it looks like Anglo American released the pigeons a little bit earlier than maybe BHP wanted to, but yeah, they're acquiring Anglo American. And I wonder, because Anglo American, they are quite diversified as a miner. I did a little bit of research when I read this news, and they have like diamonds. They have diamonds, coal. Pretty sure they have a few gold companies, coal companies in Australia. But I'm pretty certain one of the reasons why BHP is buying or wants to buy Anglo American is because of their copper assets. And that's just based off the BHP CEO who seems determined to get into copper. I think he's pretty bullish on copper. And that's probably or maybe one of the reasons why they really want to take over Anglo American. So, and I'm pretty sure Anglo American is valued quite highly, something like 30 billion according to this, but they should mention how valuing Anglo American's share capital at 31.1 billion pounds. So this must be in pounds, market cap. Yeah. So 30 billion pounds. BHP, what's BHP? $160 billion. Let's have a look. Or maybe more than 160. Yeah, 220. Wow, I was way off. So still Anglo American is well, in valuation is well below, but this will be easily the biggest company on the ASX. Now the chart for BHP doesn't look that good, just going sideways. So in fact, Anglo American's chart looks the best, but that's been taken out usually, or most likely. Now, if the share price of BHP falls below $42, that would be bearish. And if the share price goes above about $51, that would be bullish. Okay, so that company, BHP, comes in at number 2. Coming in number 1, we have, by far, easily, the announcement of the day. Sorry, Newmont, even though your share price is higher, I fully expected your share price to be higher. Resmed, share price is up 9.5%. Hooray! Okay, so I would have been surprised the share price was not up as much as 5%. So sort of in the realm of what I expected, in between 5 and 15%. So you can see I'm not sure. So my range was pretty big. So up 9.53%. This is the definition of a breakout, Resmed. So I'm going to show you the definition of a breakout, exactly what I'm looking for. Now, does that mean I will buy a trading position in Resmed? Possibly. I already own a fair bit of shares in this company because they were ridiculously cheap not that long ago. And I'll tell you when they were ridiculously cheap. And I bought in, not the bottom. It's hard to time it. So when people say you can't time the market, you can't exactly time the market. You don't know where exact bottom or top is, but you can get thereabouts. So I completely ignore anyone who says you can't time the market. It's an absolute myth. You can sort of time the market. Anyway, so Resmed announced their results, third quarter results. The main thing I was looking for was margins. It's my only thing I had a problem. The only thing I had a problem with Resmed was their margins. So the first thing when I opened up results was to have a look at their margins. And in the highlight section, they've got it right here. Gross margins grew 260 basis points to 57.9%. everything else increased because this company has been increasing the revenue, profit, operating cash flow through time. It was just their margins had been dropping the last maybe year or so. You can actually see that if we go to FinChat, Resmed. Whoops. According to this, as 10 listings. I want to use the ASX. I don't know. And if we just go to, revenue, let's have a look at the revenue, and then I'll put in gross margins here, ratios. Hopefully they have gross margins here. Sometimes they don't. Gross profit margin. Here we go. So this company had been seeing their gross margins drop. In fact, we can have a look at the quarterly numbers here. So gross margins have been dropping the last 4 years, and we had seen gross margins dropping for the last 6 or 7 quarters. And we're now up the last 2 quarters in a row. So I really wanted to see gross margins rise. So 57.9%. So we're getting to the levels we saw back in 2022. So that's the main thing I wanted to see, was that increase in margins. And boy, have we seen it. A nice increase in margins, and we get to a breakout. The whole purpose of me going through this process of looking at these announcements, looking at these charts, is to find breakouts. And we saw a breakout with Newmont. Now we're going to see another one with Resmed. This is the definition of a breakout. Share price was struggling to get above $30. We can definitely put that there, $30. And now the share price is above $30 on strength. High volume has been coming in the last 6-7 trading days. So there's been strength in this company the last week or so with that really good volume coming in. Share price has actually increased during those days. After that news that was it Ozempic or was it Eli Lilly released some results in regards to something solving obesity. I don't know. Market just overreacted again, and all those who sold out on the day are now going, why did I sell out? Oh, why did I do that? Panicking. And now the share price up to 31.34. Last time share price was this high was back in August of last year. So we are talking about an 8-month high. So I always look out for a 6-month high at least. Now we're at 8-month high for Resmed. This is the definition of a breakout. Now, the upside might not be that great. Maybe 10, 15% upside. But I would always take a 10 to 15% upside in this sort of trade if I am trading it. And if we have a look at the weekly chart, there could be even more upside. Share price high for this company is $40. So possible upside is more than $40 from here over the next year or so. If I expected that, I would take it. 33% rise in share price over a short period of time. I'm always going to take that trade. Okay, so that's the announcements of the day. The top 5, finishing with Resmed coming in number 1. Now, 3 charts. Crisis Corporation, through 2 big down days in a row. Chart looks absolutely horrible. I would say there's a little bit of panicking in there, but I definitely will be following this a little bit more closely just to see how much further the share price of this company has to fall. And then if I see a point where I think there might be a bounce, at least a bounce, or the share price is reaching a low or some support, I might take a longer term position in Crisis because I love the technology. They're in assaying, particularly gold assaying, and a much more efficient assaying procedure than what's traditionally has been done in minutes instead of hours or days. So that's Crisis Corporation. Next, MLX. I was surprised this company's down because they do tin, and tin was up. So down 5%, and this could be just a little bit of a blip. Chart looks brilliant, really good volume coming through. But again, the share price of this company is going to be related or correlated to the price of tin. And I just mentioned tin. Let's have a look at tin. SN1. We have to put a line chart here. Yeah, tin just rallied. Maybe because it fell. It's got a little bit of rally. So tin looks great. You can see how the tin chart matches up with Metals X. And final chart of the day is Duratec. I bought a trading position in this company a few weeks ago, and then I sold for a 10% profit. There it is. I bought it $10.11. I thought it was higher than that. And then I sold, I think it would have been $1.24. It was a 10% profit, something like that. And the reason I bought it had just hit this support level at $1.08. So I bought just above that when I thought the share price was going to rally. And it rallied. But look at the share price action. The last week or so. Share price has dropped from $1.24 to 97 cents. What's happening, Duratech? Some high volume coming in, increasing volume, which is telling me a bottom is just about to be reached. And I wouldn't be surprised to see, if you look at the RSI, not the indicator, RSI. If you look at RSI, I would not be shocked to see, yeah, it's getting into oversold region. This could be a nice little bounce play, by the way. I could actually trade this again for a bounce. I'll put this onto my technical video. Okay, that's all I got for today's video. And the plan moving forward is to do an answers and replies video on Saturday, the 27th of April, then do a technical update video on the 28th. And then after that, back to these sort of videos. Plus also, I want to do some standalone videos as well. Okay, so that's all I got for today's video. Have a good day. Enjoy your weekend. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.